Hey guys, and welcome back to another episode of the Growth Stock Portfolio Challenge. As you can see today, being Labor Day, the markets are closed. They will resume trading tomorrow, but the portfolio is currently sitting at a value of $1,877.67, which is a $28.37 increase since last week. This does kind of continue the month-long trend we've seen of just generally trending upwards, where we are sitting on a gain of $67.56. Of course, none of these gains are from dividends, since this is just strictly a growth stock portfolio, only one of which pays a dividend at all, and that is Activision, but that only pays once a year, which has already happened. So today I just kind of want to update you guys on what is going on with the portfolio, kind of some of the activity I have going on, as well as kind of breaking down a little bit more in-depthly one stock that I think is being overlooked by the general marketplace. So over the last week, again, everything was generally trending up. We did have two losers, which was Roku and Activision. I do have a buy scheduled to go through tomorrow. Because the portfolio is trending up, I only contributed $25 this week, which will go towards Activision, Roku, and Salesforce. I'll pull that up here. So if we go into view details, I'm actually putting $15 into Roku, $5 in Activision, and $5 into Salesforce. So unlike my other portfolios, this one's just going to be kind of a wait and see based off performance to decide how much I will contribute or if I will contribute for that week. On up weeks like this, it'll be harder for me to contribute a lot of money, but due to the volatility of this portfolio, there's going to be some weeks where it's very red, where I'll want to buy a little bit more aggressively on those dips. So other than that, there really wasn't any activity, of course, other than last week where I showed you guys my purchases. Just nothing really going on. I don't really plan to shake up this portfolio too much in the near-term future. There's a couple stocks I'm looking at to potentially add if I see some prices that I really like. Companies like CrowdStrike and Zillow, just for an example. I know Palantir is another popular stock. I'm just not quite as bullish on them as maybe a lot of people are, but that is another one probably on the short list of companies that will be added if an opportunity presents itself. So next I'll kind of get into some of the holdings in this portfolio, just kind of talk briefly about some of the unrealized gains that I may have. On all of these I am up. Some of these have been pretty volatile over the last month, and some of these I've kind of actually made pretty considerable comebacks, such as DraftKings. I was down in this position for several weeks, but in the last month or so it's come on with a strong rally. Actually, Academy is another one, which will be the central focus of today's episode. So Academy for me is a long-term hold. I think it's one of those companies that's kind of overlooked by the average investor. So I just want to talk a little bit more about why I am bullish on Academy, especially if you aren't as familiar with it. So in case you are not aware of what Academy does, they are one of the nation's largest sporting goods and outdoor retailers. They mostly specialize in sports and hunting, but they have apparel, footwear, other things like that, and currently have over 259 stores nationwide. Academy really got their start here in the Midwest and continually have been expanding their reach in recent years. They've been publicly traded for less than a year. In fact, if I go over to their chart, we can see that they're currently trading for $44.52 and are valued at $4.1 billion. So they've been trading since around early October of last year and have done very, very well since then. They IPO'd at around $13 and again is now trading at about $44.50. I think this is a pretty strong valuation for this company, especially since I believe their IPO didn't get as much attention as perhaps it should have, so it didn't see that, initial huge spike that a lot of, the major IPOs we see today, like Airbnb and DoorDash. So Academy is probably best compared to their biggest competition, which now is Dick's Sporting Goods. So Dick's Sporting Goods, by comparison, it has an evaluation of nearly $13 billion compared to Academy's $4 billion. Dick's recently took a huge spike after a very positive earnings call, and that actually kind of pulled Academy up as well. It had been kind of trending down, seeing a little bit of consolidation here. This is when I was buying Academy most aggressively. And then after Dix's strong earnings, it kind of pulled Academy up as well. So Academy is actually getting ready to report earnings themselves on September 9th, and I'm expecting that to be a pretty big earnings beat overall for them. So the estimate is currently $1.42, but I wouldn't be surprised if that's closer to maybe $2. Last time they reported earnings was a huge beat. So they beat by $1.06, which was, a huge upset probably for what the markets would have expected. But I wouldn't be surprised if something similar is going to occur again. Again, they're reporting on September 9th, so kind of just be on the lookout for that. I'm also bullish on them because their finances are very strong. So they've been continually growing their gross profit pretty steadily, except here in 2018 was a little bit of a down year, but that was mostly due to store expansion. So they had a lot of capital projects going on, which kind of dropped their bottom line. But as we can see, that started to pay off here in the last year where they had a huge jump in their gross profit and their operating income saw an astronomical spike. So I wouldn't expect jumps like this to continue since the whole last year and a half have been pretty abnormal overall, but I wouldn't be surprised to see them be a steady gainer as well as maybe even potentially a future dividend play. I don't expect that they'll be offering dividends for several years, but if they do, I wouldn't be greatly surprised based off these Seeking Alpha estimates if they came in at around a 1.5% to 2% yield. As you can see here, their payout ratio would remain very, very low and still could offer a solid 2% to 3% yield, depending on what they would decide to do. Again, I think this is years away, but I do see Academy as a strong momentum play, at least for the remainder of 2021. Academy, their big product especially, that kind of gives them a little bit of a benefit over some of their competition, is such a strong stranglehold on the ammo and guns market. I think this will be a huge player for them for the foreseeable future. And as far as an evaluation for Academy, I don't really have a solid number in mind, but I do think if you are looking to really enter into this position, I think around a $40 per share entry point would be really a kind of good place to jump in, because I wouldn't be surprised as this nears 50 probably after earnings. They'll probably meet a little bit of resistance there and kind of bounce back down. But I think if you could really get some shares around the $40 price point, I think that would be a great entry point into this holding. I've kind of looked at what some of the other analysts are saying, and it seems to be a pretty consensus buy across the market, but some of the institutional buyers haven't been buying it as aggressively. I think that's mostly due to the unknown of being a brick and mortar retailer, but Academy does have a good online presence, which I think is a good thing, obviously, as we continue to kind of shift into a strictly e-commerce retail market. As you can see, the recommendation along with 8 analyst price targets, it generally sits as a buy to strong buy here on Yahoo Finance. As we can see here, some of the major institutions are upgrading to buys and or outperforms. JP Morgan maybe a little bit more bearish with an overweight, as well as Stephens & Company. I'm not sure exactly what has brought that on, but I generally would probably be a little bit more bullish overall. I think, honestly, if you were lucky enough to buy Academy over the last month or so, especially through July, I think you were getting some really good prices for a undervalued stock. Probably in the next 3 to 5 years, I think Academy could get close to 60, 70, maybe even $80 per share. That would be a strong bull case overall. But again, this is a company that is currently less than a third of the value of their biggest competitor, Dick's Sporting Goods. So I think that case is definitely one to keep an eye on. I think it's more than possible, if not it being able to exceed that, especially if Academy is able to continue to have a huge share of the ammo sales and gun sales here in the United States. As long as they keep expanding out towards the East and West Coast, I think Academy will continue to grow right along. Of course, those will lead to rising costs, but I think if they can manage their expenses, I think they'll be able to grow their bottom line. And if they grow their bottom line, I think they could eventually become a dividend payer. But again, this is many, many years away. So again, guys, just wanted to kind of talk a little bit about Academy before I wrap up here. So if you guys have enjoyed the video, go ahead and drop a like as well as subscribe to the channel if you'd like to stay up to date on everything I am posting. Be on the lookout for my Wednesday dividend portfolio update. I'm excited to talk about a shakeup with my Roth IRA if you are following me on social media. So with that being said, guys, enjoy the remainder of your Labor Day weekend, and I'll catch you later.